another big week, possibly the biggest one of the summer, maybe, as we've got inflation and we've got Nvidia. But really, it's very much about Nvidia. Market's been broadening out. The big thing about the rally up off the August lows has been the participation and the breadth, the different types of sector and factor leaders that we've had. All that's nice. But if you really want to get things to melt up and really rally in a hurry, you're going to need the giants and the heroes to come back to the forefront, and that's Nvidia. Stock light's still green. Even though we're losing a little bit of momentum, it looks more like consolidation. Dollar yellow alongside bonds. I'll tell you why in a sec for the chart. And for those asking why crypto's still red, until Bitcoin gets out of the downtrend, it's still in a very clear channel, lower highs and lower lows dating back months. Let's first look at stocks. The S&P 500 next to the NASDAQ, as I pointed out at the top of the show, pretty different, important, because there's a decent gap now, as this is the opportunity for tech to close that gap. That is the main question of the week. If the NASDAQ closes the gap by moving higher, we will be getting all-time highs in the S&P 500. The math is very simple. Nvidia and the big Mag 7, even though their weight has lessened a tad, still is the massive, biggest chunk of the market, and that's going to be hugely important. Because the S&P 500, if it does turn back around, technically you can still have a double top situation, given that we haven't gotten a fresh new all-time high. So technically you do want to see some good action this week. You can't sleep on the potential for volatility, even though we've had a really nice run up off the lows, and it seems like things are going very well. As far as the macro goes, given the Powell went so dovish last week, there's probably no expectations for extreme volatility or problematic moves in the dollar and yields. However, there should be some technical support here for both, which is why I've got the light yellow. It had been red for the dollar. Took it off last week, maybe a little bit early. But the point is that we're still close to those lows from the trajectory post-COVID. That's on the left side of the chart, 2022, where yields and the dollar are going up together. We had to fight inflation, but we also had shockingly good and best-in-class global growth here in the U.S. So that was a pretty good regime when the dollar and yields were going higher coming out of COVID. Even though 2022 had a rough stock bear market, ultimately that was kind of the price we had to pay for rebounding out of COVID so quickly and strongly. If the dollar and yields break down into fresh new lows, which would be one-year lows, and in the case of the dollar taking us back to like early 22, I still am not convinced that that's something you really want to root for generally as a participant in the economy or for stocks overall, because now that the market has included small caps, cyclical, value plays in the last month, this bounce back, you don't want to really have an event economically that's going to be perceived as bad. Maybe a revision downward to the second look at GDP or anything bad on jobless claims. I expect there to still be some sensitivity. Watch for yields in the dollar, though. I think most likely to find some support here. If they break down, that's a big deal. But otherwise, we don't really have to get into the chart too much this week unless we make lower lows in the dollar in the 10-year. But it's possible. Don't, again, ignore the economy as a factor here. Even though Powell's clearly opened the door and we should generally be focusing on the potential for him to cut heavier than cut lighter, the economic surprise rate has been balancing out here from Citibank. Look at the way we've gotten consistent kind of consolidation in the economic surprise rate. Dare I do technical analysis on the chart? But that is an improvement. So all of the data we were missing and really falling in a dramatic fashion that got us to start pricing in cuts after we sold the stock market off, it seems like economists have gotten their head around what to expect. So if economic data then starts surprising to the positive side, then you might get some of the action in bonds. But until you get a big move in bonds, the focus for the week is undoubtedly Nvidia. It needs to hold up. It needs to not disappoint. It'd be bonus points if Salesforce did the same, but Nvidia is the focus. If it goes back below 120, or if the NASDAQ makes lower lows on the short-term chart, then I'll change the light for stocks to yellow. See you tomorrow.